What's really driving the US stock market right now? Is it the Fed, the rise of AI, or something else entirely? Welcome to MacroMoney USA, the channel where power, policy, and profits collide. If you're looking for professional, institutional-grade insights into the forces shaping our financial world, you've come to the right place. We're here to cut through the noise and deliver deep, data-driven analysis that helps you stay ahead. Let's start with the big one, the Federal Reserve. Every investor from Wall Street to Main Street hangs on every word from the Fed chair. Why? Because their decisions on interest rates have a ripple effect across the entire economy. When they raise rates, borrowing gets more expensive for companies and consumers. This can cool down inflation, but it can also slow economic growth and put pressure on stock prices. Conversely, when they cut rates, it's like hitting the gas pedal. Borrowing becomes cheaper, stimulating spending and often boosting the market. But it's not just about the rates themselves. It asks about the forward guidance, the clues the Fed gives about its future plans. We dissect their statements, analyze the economic data they're watching, and help you understand what their next move might be and what it means for your portfolio. We look at inflation trends, employment numbers, and consumer spending to build a complete picture of the Fed's mindset. Now, let's pivot to the most electrifying topic in decades, artificial intelligence. AI isn't just a buzzword, it's a technological revolution that's reshaping entire industries. At the heart of this revolution are semiconductors, the tiny chips that power everything from our smartphones to the massive data centers training AI models. The demand for these advanced chips is astronomical, creating a fierce competition among tech giants. Think about companies like NVIDIA, AMD, and Intel. Their performance is no longer just about selling computer parts, it's a barometer for the entire AI ecosystem. We dive deep into the semiconductor industry, analyzing supply chains, manufacturing innovations, and the corporate strategies that will determine the winners and losers in this high-stakes race. Who has the technological edge? Which companies are securing the most lucrative contracts? These are the questions we answer, providing you with a forward-looking perspective on where the real value is being created in the tech sector. But technology doesn't exist in a vacuum. The rise of AI and the strategic importance of semiconductors have thrust them onto the world stage, making them a central piece of the geopolitical puzzle. This is where things get really interesting. We're seeing a new kind of global power play centered around technology. Governments, especially the US and China, are using sanctions, export controls, and massive subsidies to gain an upper hand. These policies directly impact capital flows, determining where billions of dollars of investment are directed. For example, a US restriction on exporting advanced chips to China doesn't just affect the companies involved, it reshapes global supply chains and forces international investors to reassess risk. We track these geopolitical developments from Washington to Beijing and beyond, analyzing how sanctions and government policies influence corporate earnings, market sentiment, and long-term investment themes. Understanding this intersection of technology and geopolitics is no longer optional. It's essential for navigating today's complex markets. So how does all this tie back to the US stock market? Everything is connected. The Fed's monetary policy creates the financial weather, setting the overall conditions for growth or contraction. Within that environment, technological trends like AI act as powerful engines, creating incredible opportunities in specific sectors. And finally, geopolitics adds a layer of complexity and risk, capable of creating both headwinds and tailwinds for specific companies and industries. For instance, a dovish Fed might lift the entire market, but a new tech sanction could simultaneously hammer the semiconductor sector. Our job at MacroMoney USA is to connect these dots for you. We don't just report the news, we analyze the interplay between these powerful forces to give you a coherent, actionable framework for understanding the market. We believe that the most successful investors are the ones who look beyond the daily headlines. They understand the macro trends, the big picture forces that drive markets over months and years, not just days. They look at monetary policy, not just as interest rates, but as a reflection of the economic health of the nation. They see AI not just as a cool gadget, but as a fundamental shift in productivity and value creation. And they view geopolitics not as distant political noise, but as a critical factor that directly impacts corporate profits and investment risk. This forward-looking institutional approach is at the core of everything we do. We bring you the kind of analysis that professional fund managers use to make their decisions, presented in a clear and accessible way. Here on MacroMoney USA, we'll be covering all of this and more in our upcoming videos. We'll have deep dives into specific companies leading the AI charge, detailed breakdowns of the latest Fed meetings, and timely analysis of geopolitical events as they unfold. Our goal is to empower you with knowledge and perspective. The financial world can seem complicated, but by focusing on the key drivers, policy, technology, and global power dynamics, you can navigate it with confidence. We're building a community of serious, forward-thinking individuals who want to understand the world on a deeper level. If you're ready to move beyond the surface level commentary and get a professional take on the forces shaping our economy and markets, you're in the right place. We invite you to join us on this journey. Thanks for watching. Don't forget to subscribe to MacroMoney USA and hit that notification bell so you never miss our deep dive analysis. We'll see you in the next video.